A company almost nobody outside the chip industry had heard of a year ago just watched its stock price jump 466% in a single day of trading. Not over a year, not over a quarter, in one trading session on the Shanghai Stock Exchange. That same company saw its share of the global memory chip market roughly double in about 12 months. And weeks after that stock surge, Samsung, the company that has run the memory chip industry almost unchallenged for over 3 decades, was quietly pushing out a product roadmap that looked strikingly similar to what this Chinese company had just shown the world. The company is called CXMT, and if you've never heard that name before, you're about to understand why the people who run Samsung's memory division can't stop hearing it. This video is going to break down exactly what CXMT did, why Samsung is reacting the way it is, and why this fight over memory chips, the most boring-sounding part of your phone or laptop, might actually be one of the most important tech stories of the year. Here's something most people don't think about. Inside every phone, every laptop, every server running an AI model right now, there are 2 totally different kinds of chips doing 2 totally different jobs. There's the processor, the part that actually thinks, does the math, runs the software. And then there's memory, the part that holds all the information the processor needs while it's working. Processors get all the attention. Memory does not. Nobody makes a documentary about RAM. But here's the thing. Without memory, a processor is basically a brilliant mathematician locked in a room with no paper and no notes. It can think fast, but it has nowhere to put anything down. For decades, this part of the industry has been run by exactly 3 companies. Samsung, out of South Korea, holds the largest share of the global memory market. SK Hynix, also South Korean, sits in second place. Micron, based in the United States, rounds out the top 3. Together, these 3 companies have controlled more than 90% of the world's memory chip supply for years. If you bought a phone, a laptop, or a graphics card almost anywhere on Earth, there's a very good chance the memory inside it came from one of these 3 names. This wasn't an accident. A single leading-edge memory factory can cost tens of billions of dollars to build. The manufacturing process demands a level of precision that borders on absurd. It means stacking layer after layer of circuitry into a space smaller than your fingernail, with almost zero room for error. For a long time, that made this club feel permanently closed. So what happens when a state-backed challenger decides the closed club doesn't apply to it? CXMT, short for Changshan Memory Technologies, is based in Hefei, a city in eastern China that most people outside the country couldn't point to on a map. The company started years ago as a fairly minor player, producing older generations of memory chips mostly for the domestic Chinese market. Nobody in Seoul or in Boise, Idaho, where Micron is headquartered, was losing sleep over a memory chip maker in Hefei. That changed fast. On July 27th of this year, CXMT listed on Shanghai's Star Market, in the largest technology stock offering in Asia so far in 2026. The company raised roughly $8.6 billion. On its first day of trading, the stock closed up 466%, briefly touching gains of more than 500% during the session. That pushed CXMT's market value to roughly 3.3 trillion yuan, somewhere around $480 billion, making it, for that day, the single most valuable publicly listed company in mainland China, ahead of Industrial and Commercial Bank of China itself. Now, here's a myth worth clearing up, because a lot of headlines ran with the 466% number as if it were pure proof of overwhelming global demand. Part of that explosive first-day move came from something more mechanical. Only around 7% of CXMT's shares were actually free to trade at listing, with the rest locked up. A small float plus enormous retail demand, reportedly over 200 times oversubscribed, is a recipe for a violent price swing on day one, no matter how good the underlying company is. That doesn't mean the excitement was fake. It means the stock chart alone isn't really the story. The story is what's underneath it. In the middle of 2025, CXMT held right around 4% of the global DRAM market. DRAM is the most common type of memory chip, used in phones, laptops, and servers. By early 2026, that number had roughly doubled to somewhere around 8%. That might not sound dramatic on paper, but in an industry where market share usually shifts by fractions of a percent per year, doubling your global position in about 12 months is the kind of number that gets read out loud in board meetings in Seoul. And here's the part that should have kept CXMT permanently behind. Quick pause before we get into how CXMT actually pulled this off. If this one's holding your attention, that's exactly the moment to hit. It genuinely helps this video reach more people who'd find it interesting. And subscribe if you want the next deep dive the moment it drops. Alright, back to it. Just like the more famous restrictions placed on companies like Huawei, CXMT does not have access to the most advanced lithography machines in the world, the ones made by the Dutch company ASML, that use extreme ultraviolet light to etch impossibly small patterns onto silicon. Those machines are considered essential for producing the most advanced chips at scale, and American-led export restrictions have kept them out of China for years. Without that equipment, CXMT has to rely on older, less precise manufacturing tools and compensate through sheer engineering effort. According to industry analysts, this forces the company to use roughly 30% more silicon wafers to produce the same amount of usable memory that a company like Samsung or Micron can produce with fewer, more advanced machines. That's not a small inefficiency. That's a structural cost baked into every single chip that rolls off CXMT's production line. Think of it like a runner who isn't allowed to use the newest pair of racing shoes everyone else has. On paper, that runner should finish somewhere near the back of the pack permanently, no matter how hard they train. Instead of accepting that, the runner spends every waking hour on technique, conditioning, and strategy until suddenly they're crossing checkpoints at nearly the same time as everyone else, shoes or no shoes. So how exactly did CXMT close that gap? CXMT's answer to being cut off from the best tools wasn't to wait for restrictions to lift. It was to throw enormous money and manpower at squeezing more performance out of what it already had. Part of that has come from stockpiling older generation lithography machines before restrictions tightened further, then running them harder than anyone expected. Chinese toolmakers have also been developing their own deep ultraviolet lithography systems, a step below the most advanced machines, but a meaningful upgrade over what CXMT was previously working with. The result has been a level of progress that caught most Western analysts off guard. CXMT's monthly wafer capacity has gone from somewhere around 100,000 in early 2024 to roughly 280,000 by the end of 2025. Industry forecasts now put that figure at around 350,000 wafers a month by the end of this year, and as high as 500,000 a month by 2028, which analysts estimate would give CXMT close to 17% of total global DRAM supply. For comparison, Samsung currently runs somewhere around 720,000 wafers a month. CXMT isn't catching up to that, but it's no longer a rounding error next to it either. The revenue numbers tell a similar story. CXMT's revenue grew from around $3.3 billion in 2024 to about $8.6 billion in 2025, an increase of roughly 156%, and the company posted its first ever annual profit around $1 billion. In the first quarter of this year alone, revenue came in at about $7.3 billion, up somewhere between 700 and 720% from a year earlier, almost matching its entire 2025 total in a single quarter. CXMT's chips are already reportedly used in devices from Xiaomi, Honor, Oppo, and Vivo, with some estimates putting its share of Chinese Android smartphone memory outside of Huawei's own devices above 30%. And CXMT isn't stopping at basic memory chips either. The company has been closing in on validation for its next-generation mobile memory known as LPDDR6, the type of chip that goes into flagship smartphones. As of early August of this year, CXMT was reported to be nearing the end of research and development validation for its first LPDDR6 design, the second of 4 stages a chip typically passes through on the way to mass production, targeting speeds of 12,800 megabits per second. That puts it in direct competition with the next-generation chips SK Hynix and Samsung themselves have only just started showing off. SK Hynix is targeting mass production of its own LPDDR6 chips in the second half of this year. Samsung unveiled its own LPDDR6 technology at CES back in January. CXMT is racing to clear validation on a similar timeframe, not years behind, but close enough that industry watchers are noticing. That's the part that should genuinely unsettle the established players. This isn't a company copying yesterday's technology. In at least this one category, it's developing tomorrow's technology on almost the same calendar as Samsung. Here's where the story should have stopped, according to basically everyone in the industry who's been studying this for years. Now, before this starts sounding like CXMT is about to dethrone Samsung outright, it's worth being honest about where the real limits still sit. CXMT remains several years behind the technological frontier in the single most profitable category in memory right now: high-bandwidth memory, the specialized chips used in AI accelerators like NVIDIA's GPUs. CXMT has said it's targeting mass production of its first-generation high-bandwidth memory, known as HBM3, by the end of this year. But reports through the spring of 2026 described that timeline slipping, with the chips still in sampling and testing rather than full production. Industry estimates still put CXMT somewhere between 2 and 4 years behind Samsung and SK Hynix, specifically in this category. And SK Hynix, for context, has already been shipping high-bandwidth memory in volume since 2023. NVIDIA's newest generation of AI chips is already lined up to use high-bandwidth memory from SK Hynix and Samsung instead. CXMT isn't in that conversation yet. CXMT is also now facing serious political headwinds of its own. In June of this year, the U.S. Department of Defense reinstated CXMT on a list of companies it considers linked to China's military-industrial base. It's worth being precise about what that actually means. The designation doesn't ban American companies from doing business with CXMT outright, and it isn't a trade sanction. What it does is restrict the Pentagon's own ability to contract with the company going forward, and it's a reputational flag that other governments and investors pay attention to. The listing followed years of back and forth. CXMT was briefly removed from an earlier version of the list, then reinstated after criticism from China hawks in Washington, and the timing landing just weeks after CXMT's stock surge made global headlines triggered a bipartisan congressional inquiry almost immediately. And the structural cost disadvantage hasn't disappeared. Needing roughly 30% more wafers than competitors to produce equivalent output is not a problem that gets solved through willpower alone. It's a persistent tax on every chip CXMT makes, one that will keep squeezing its margins unless it eventually gains reliable access to more advanced manufacturing tools, something that remains far from guaranteed given the current state of export restrictions. So, the honest picture isn't CXMT has already won. It's that a company operating under real structural handicaps has closed a gap that was supposed to take much longer to close on any realistic timeline, and it's done it fast enough to visibly rattle the confidence of the companies that used to treat this market as their own private club. Here's the part that actually justifies the word humiliated in the title, because Samsung's reaction hasn't been quiet confidence. It's been visible, market-moving concern. Earlier this year, as reports spread about CXMT's expansion plans and South Korea's own memory giants unveiled massive counter-investment programs, shares of Micron dropped more than 10% in a single day, while Samsung Electronics and SK Hynix each fell somewhere between 7 and 9%, sharp enough to trigger circuit breakers on South Korea's Kospi stock index. That's an unusual reaction for two companies that, in that same stretch, were reporting some of their strongest earnings in years, driven by soaring AI-related memory demand. Samsung's own leadership has had to address the CXMT question directly on earnings calls, walking investors through why the company still believes its technological lead matters, even as memory shortages are expected to persist industry-wide into 2028, regardless of what CXMT does. That's not the kind of thing a market leader typically has to explain unless the market is genuinely asking. And then there's the roadmap timing. Samsung showcasing its own next-generation LPDDR6 memory at CES this year, on a similar public timeline to CXMT's own validation push, is the kind of coincidence that raises eyebrows inside the industry. Nobody at Samsung is going to stand on stage and say they accelerated a roadmap because of a Chinese competitor. But when a company that held a single-digit percentage of the market a year earlier suddenly starts racing you toward the same cutting-edge specifications on a strikingly similar calendar, the timing does a lot of the talking on its own. This is really the core of what copying means here. It's not that Samsung is duplicating CXMT's actual chip designs line for line. It's that CXMT's speed has forced Samsung and SK Hynix to defend a market position they never expected to defend against this particular rival. When the company you're used to looking past suddenly sets the pace you have to match, that's its own kind of humiliation, even without a single stolen blueprint involved. Step back from the stock charts and the spec sheets for a second, and here's the bigger pattern worth sitting with. Memory chips sit at the foundation of basically every piece of modern technology. Your phone, your laptop, every AI data center currently being built around the world. For decades, that foundation rested on a small, stable group of companies the rest of the world simply trusted to keep the lights on. CXMT's rise fits a pattern you've probably seen play out elsewhere in Chinese technology. A company gets cut off from the best tools in the world, and instead of quietly accepting a permanent disadvantage, throws everything it has at closing the gap anyway. The runner never got the shoes. It's just closing the distance to the front of the pack regardless. What makes the memory chip story different is that it's not really about one dramatic breakthrough. There's no single new transistor or wild manufacturing trick. It's closer to slow, compounding pressure. A little more wafer capacity every quarter, a little more market share every year, a product roadmap that keeps landing closer to the industry leader's own calendar. Individually, none of it looks dramatic. Added together over a couple of years, it's enough to move stock prices in Seoul and force earnings call conversations Samsung never used to have. Whether CXMT eventually becomes a genuine fourth major player, standing shoulder to shoulder with Samsung, SK Hynix, and Micron, or whether political pressure and its structural cost disadvantage cap its rise before it gets there, is still an open question. But the era where Samsung could treat the memory chip market as a closed club with 3 permanent members appears to be over. There's a fourth name in the room now, and for the first time in a very long time, the market leaders are the ones adjusting their plans around someone else's calendar. It's also worth remembering that memory chips don't exist in isolation from everything else happening in this broader tech rivalry. Every gigabyte of memory CXMT ships domestically is a gigabyte that Chinese phone makers, server builders, and AI companies no longer have to import from South Korea or the United States. That's not just a business story about market share. It's a supply chain story about how much leverage any single country can hold over another simply by controlling a component most consumers never think about. The more of that leverage China claws back through companies like CXMT, the less power future export restrictions actually carry, which is exactly the outcome US policymakers were hoping to prevent in the first place. If you found this one interesting, let me know in the comments. Do you think CXMT actually catches up to Samsung and SK Hynix in the next few years? Or does it hit a ceiling it can't engineer its way past? Drop your take below. And if you want to understand the bigger picture behind all of this, the chip restrictions, the export bans, and why China keeps finding ways around them, go check out the video I made on Huawei's chip breakthrough right after this one. It connects directly to everything you just watched. Now, like this video if it was useful, subscribe if you want more of these breakdowns, and I'll see you in the next one.